It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, the wealthy investor. Welcome back to episode 229 of the Trading Stocks Made Easy podcast. So nice to be back with you again. Hey, listen, I got to talk to you in this week's episode about what is going on in the stock market right now, how you could be making money right now, and how you could use AI as a wealth building tool over the next 2 to 5 years. Does this make sense? All right. So here's what's going on in the stock market. Every once in a while, we get a technology that drives Wall Street crazy. Stocks right now that have the ability to monetize artificial intelligence are rising dramatically. Not because the fundamentals are there, meaning because the companies actually figured out a way to make money from artificial intelligence. It's because of the promise. Now here, if you are both a trader and investors, where you have to be supremely careful. So let me explain this to you in layman's terms you can understand that make it less complicated, because Wall Street sometimes takes a topic like AI and they complicate it and co-opt it with their own terminology. Okay, so artificial intelligence is a broad term that essentially applies to new technology that's more advanced, that can make everything from your handheld device, like your cell phone, your Mac computer, your television, run at its most efficient. Okay? So when we start talking about AI, artificial intelligence, right now it has more to do with efficiency than anything else. Now, it also has relevance to things like editing, video editing, video creation of movies and television shows, spokespersons, instructional videos, where there is now software that can create an individual who represents a company who's artificial and a message without a real human being on camera and just being behind the scenes pulling the strings. The fear of this video production AI is that you can create what they're calling deep fakes. In other words, we could have our president saying, we're about to be hit by a nuclear missile that can spread over viral channels, and the president knows nothing about this, and it looks exactly like him with all the presidential markers, protocols embedded in the video. Now, this kind of artificial intelligence is very good at plucking, essentially, data from the internet and composing it into one live video and or stream. Here in Hollywood, since I broadcast from Hollywood, the movie business is quaking in its boots because it's possible with AI to make the next Mission Impossible movie without Tom Cruise. Now, the technology will be primitive, but certain forms of artificial intelligence can say, create this Tom Cruise Mission Impossible movie, and it'll be directed in the style of, let's say, a Martin Scorsese. The software will take time to do it, but within a day, a week, or a month, it can produce the story, the actors, the conflict, because it's actually plucking data from the actual Mission Impossible movie that's available on the internet. So this kind of creation is being titled by some as piracy, because when you start creating stories, artificial intelligence is borrowing images from millions of websites, putting it together so that it's one fluent story. The efficiency of your computer, your television, even your oven is going to have chips in it that make it more efficient, is where the danger is. In other words, if I can develop circuitry and then microchips that says Tyrone's oven tends to run 2 hours a day at this particular temperature, the chips can instruct the inner circuitry to run the oven at its most efficient point based on what it is that I'm cooking. The downside of all of this is this artificial intelligence can also be destructive. In other words, if there are semiconductor chips and circuitry in your car, it can make sure that your engine only lasts for 2 to 5 years. So that every 2 to 5 years, you have to go out and get a new engine, a new transmission, a new chip to run the board in your car. So for example, out here, I drive one of those famous Range Rovers when I'm in Los Angeles. I notice my check engine light has been on, but I'm tired of reacting to the check engine light. If this board actually had a piece of AI in it, it could stop the entire vehicle, and all that would need to be replaced is the chip. So let's just be honest, manufacturers of televisions, computer monitors, and electronic home devices don't want that device to last forever. Well, if someone is sinister enough, they can make sure that you need a brand new 90-inch television every 2 years, or whenever the Super Bowl is about to be broadcast, right? So this idea of creating intelligence, calculated data, and its many uses is really what Wall Street is all about. Now, what does that have to do with the stocks that are actually rising? So let me explain that to you. I won't mention all of the companies in the stocks that are rising dramatically, but there's one company in the stock market right now where the shares are on their way essentially to $1,200 from $400 a share like 8 weeks ago. Okay? I don't support that kind of rise in a stock price. You may think initially that as the wealthy investor, stock market investor, and trader, I would endorse a company whose stock price goes from $400 to $1,200 within 6 months. Not at all. On Wall Street, we call that a parabolic move, a move that just explodes out of nowhere. That usually ends with the stock actually declining because institutional traders know that's not a normal pattern, and they have all these strategies for making money off a stock's decline. Yes, you can make millions when your favorite stock drops. The faster it drops, the faster the millions, right? So I like companies and shares that where the upward movement comes from revenue growth. That tells me the company's making more money and the shares are going to go higher because the company's got a bigger market share. I don't like stocks that just explode. Now, this is really where you have to be aware for those of you who follow me at, let's say, WI Trade School, or you are currently in any of my live courses where I'm teaching you right there as close to real time as possible how the stock actually moves. This is where you have to be comfortable. This is where you have to be careful because we all want our stocks to go higher, right? So let me explain to you before I explain these AI stocks. Let me explain to you two concepts. Most people are in the stock market for something called wealth accumulation. In other words, we're trying to get rich or richer by owning shares of companies that have a tendency to rise. There's another group of people that are in the stock market for wealth protection, right? They want to keep what they have, but they want the money that they have invested to grow, but at a slower rate. Wealth accumulation, we're willing to take a little bit more risk on a stock that won't go parabolic, but that is getting market share. The company's getting market share and the shares are rising. If I'm trying to protect what I have, I'm going to be in more defensive stocks. Companies that are established like Johnson & Johnson, Coca-Cola that pay a dividend. I just want my money to continue to produce a consistent rate of return. You would think that everybody is in a wealth accumulating mode to one extent or another, but no. The reason your money really is in the stock market is so that you get a higher rate of return than having it in a savings account. And to get a higher annual rate of return, you're willing to expose some of that money to risk. Okay? All right. So the reason that most people buy stocks is for an annual rate of return that is much higher than just putting your money in the bank, right? And that's where dividends come in. If you buy dividend-paying companies, not only you get an annual rate of return, you're getting a cash-on-cash return, a dividend check mailed to you every 13 weeks. Therefore, your investment is actively throwing off income. Some people do get rich investing in trends. So I'm going to go back 30 years ago when Microsoft was just a small publicly traded company and Bill Gates had a vision of Microsoft Word, the operating system, on every computer in America and around the world. He did really well because that did, in fact, happen. So when software was being developed that would run handheld devices, software manufacturers and the people who licensed software got rich. And if you own shares in those companies, you got unbelievably wealthy. Okay? Some people are following that trend right now when it comes to AI, buying stocks not for wealth preservation, but for wealth accumulation. The next step behind that is greed. If you get in the habit of always chasing the next big trend on Wall Street, or the trend that, let's say, Wall Street is financing, you are running the risk of always being greedy because you haven't learned to be balanced, right? Hey, I can chase a little AI, but I'm going to make sure that my millions of dollars are safe and in dividend-paying stocks, okay? So the trend right now is all about AI, but not every company involved in AI performs the same service. This is what I'm about to tell you now. This is what I really love about the stock market. What I really love about the stock market, if I play the AI trend from the circuitry, from the laboratories who own and create the chips, to the companies who are going to put that technology to work, to the production companies that will use it. See, I can get wealthy from AI 360 all the way around. But if you think AI is just about one company, there's a tendency to get greedy. So when one company says, this is how we're going to run our servers, for example, for efficiency, I want to find another company that has the same goal that is also publicly traded. Why? Because as one company develops new technology, the other company will copy that technology. I own those stocks. The revenues are rising in both stocks. Boom. I'm in on AI in 2, 3, 4, 5 different companies without just chasing one. There's a tendency when you're a retail investor and you're just trading stocks from home to think singular, that only one company can have a giant market share. And that's really not how the stock market works. There can be 7 companies who share a piece of a really big market. That's when the deck is really stacked in your favor. When you stop looking at one stock to dominate and you look at 3, 4, or 5 stocks to share in a market. Okay? So for those of you who are actually looking to cash in on AI, don't buy the stock if you don't know the story. If you don't understand the role that that company actually plays in the 4 other companies that actually play a role in developing artificial intelligence, you are undereducated as it relates to the trend. Just because you found one company that rises does not make you a genius. What makes you a genius is your education when you're able to explain all the facets from AI and you're able to own all of the stocks that own or develop the new technology. You see, in the world of the stock market is one game and 100 ways to play it. It's also 100 ways to put your education to use. That's how I prefer you actually look at the stock market. More on going AI crazy right after this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
We're talking about going AI crazy today and what is happening in the stock market. Okay, here on this show, I like to educate you generally about trends in the market, right? At witradeschool.com, if you don't have a membership, I don't know what you're waiting for. That's where you're really going to learn how to trade. But the broader concepts I want to introduce to you. Now, this is really, really, really important, the next thing I'm going to share with you. You see, there's a saying, if you can't beat them, join them. I don't know if you've ever heard that. Well, on Wall Street, it goes like this. If you can't beat them, buy them. Right? So if I'm looking to make millions of dollars off of artificial intelligence as a trader and as an investor, I'm going to have an eye for companies that are developing new AI technologies, but I'm also going to have an eye for companies who are going to buy them. Right? So this is what I love about stock market trading. For those of you who've been listening to me on this show for years, you know what I mean, is like you don't have to stay in one lane when a future trend is at play. You can play the acquisition game. So for example, I'm going to make a prediction right here, and I love it when I do this on the show because years later you listen back and you go, hey, didn't Tyrone say that was actually going to happen? A company called Microsoft, which is investing hundreds of billions of dollars in all types of artificial intelligence, they actually have a division that does nothing but buy other companies, right? So they may be trying to develop lead technologies, but at the same time, they have money in their coffers to go out and buy the next leader of the pack. So if I really wanted to play AI, I could play it by owning shares in Microsoft or cover call writing on Microsoft shares. By the way, those 2-week premiums are just ridiculous. So if you can afford the shares, great cover call right. Okay, boom, I gave you a stock tip. I didn't intend to do that. But I like Microsoft shares from an acquisition point of view, right? Because I'm just the investor. I'm the guy who's putting up the money in the shares. They're actually running the business. Well, when you say I'm going to buy Microsoft shares so that when they make an acquisition, I'll be there, that is a great perspective on the stock, right? And it's a great perspective on the stock market. So sometimes when we see trends like this, I don't have to be the one who picks the winning company. I just have to be the one who picks owning shares in the winning companies because the acquisition game is huge. If you look at the ABC television network, there were a time when television networks were standalone entities, right? Then ABC merged with Cap Cities, right? Capital Cities sold the ABC television network to who? To Disney. Why? The kings on Wall Street understand accumulations and acquisitions. I know this is a rather mature topic for a podcast, but it's very, very relevant. Okay? So when you're investing in a company or you're investing in a trend, one of the things you should be thinking about is who's going to buy up the smaller players. Guess who else is going to be at the forefront of acquisitions? It's going to be Google. Now, the problem is there's a form of AI when you just speak what you want and it pulls up all of the results on the internet. How does Google make most of its money? Through search. So the company that is developing voice recognition search, I'm quite sure Google is going to make them an offer. Why? Because when you're king of all technology, you want to remain king of all technology. Or let me explain to you what's going on technologically. This is something you can identify with. Have you ever played Monopoly? What is the object of Monopoly? You might not have thought it this way. Well, Monopoly literally means one many. The person who bankrupts everybody at the table, they're the winner, right? That's how you win at Monopoly. What do you think is going on in technology? People are trying to bankrupt other companies or acquire them so they become king of the hill and maintain their status. So if you own Google shares, Class A or Class B will do, guess what? I guarantee you within the next 24 months, they're going to make a major acquisition. Why? Because if you can't beat them, buy them. So what is the lesson that we're learning here today? Today, it's AI. 5 years from now, it'll be some new technology. If you stick primarily with Dow stocks that pay a dividend and the companies are very well run, they have the billions of dollars to make an acquisition. And I'll leave you with this, something to think about if you own Apple shares right now, which are not going anywhere because they simply haven't demonstrated the same commitment to AI that bigger companies like Microsoft has. I guarantee you Apple is looking to make some sort of AI acquisition by another company because they want to maintain their leadership and, most importantly, their relevance in the world of technology. Now, as other trends in the market reveal themselves, I will be the first right here on Trading Stocks Made Easy to introduce you to those trends and ways of thinking about share ownership. Your wealth really is in your thinking, not picking one winner, but picking 10 winners, picking 30 winners, learning how to trade and invest in the companies that are dominant with what it is that they do. If you can't beat them, buy them. Remember that. I'm Tyrone Jackson, the Wealthy Investor. Please sashay on over to thewealthyinvestor.net and download my free ebook. It's only going to help you get to know the stocks that are popular in this market so that you can make a profit. I'll see you next time.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.